Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news of a small change in course by the US Fed. The Fed was expected to raise its benchmark interest rate by 25 basis points to an upper bound of 2.5%, and they delivered on that long-signalled indication, despite the political pressures and market concerns. Their forward rate projections are not as dovish as many assumed, although further increases in 2019 may not be as frequent. Markets like the forward indication and are up strongly on the equity side. The bond rally has faded. Meanwhile, American existing home sales rose more than expected in November from October. Most analysts were expecting a small pullback in sales from the prior month, but in the end, they were up at the rate of 1.9% on a seasonally adjusted basis. However, that can't really mask that November sales volumes are 7% lower than the same month a year ago. The median existing family home price was $260,500 in November, up 5% from November 2017. Their benchmark home mortgage rates have fallen to 4.63% after reaching 4.94% a month ago. The US third quarter current account deficit came in right on expectations at $125 billion, or 2.4% of GDP. That is up from 2% of GDP in the second quarter and is their largest quarterly dollar deficit since 2009. But on a percent of GDP basis, it's amongst their smallest in 20 years. And remember, the New Zealand third quarter GDP deficit came in at 3.6%. Ahead of the Fed's release, the S&P 500 recovered 1.2% in trading today, and following the release, it held those gains. And staying in the US, their population grew in the past year at its smallest rate over the last 8 decades, as more people died and fewer were born. The country's population rose by 0.6% to 327 million people. That was the lowest rise on record since 1937, even though they welcomed almost a million migrants. China is to pump another $52 billion into new rail infrastructure as an economic stimulus measure to counteract their slowing economy. This is a backtrack on their part, but not unexpected. Overnight, Italy and the EU have agreed to a budget compromise, one that seems to be a win for the new Italian government, permitting them to produce a 2.04% deficit in budget 2019. It's a deal that avoids the EU imposing fines on Italy for the breaches. And Argentina is in recession after its economy shrank 3.5% during the third quarter. It fell 4% in the second quarter. GDP is now 1.4% lower from January to September compared with 2017, and the IMF says its expected annual fall of 2.6% in 2018 and another 1.6% in 2019. In Australia, regulator APRA has scrapped its interest-only home loan limits as their housing market downturn accelerates, resulting in a sharp drop in mortgage lending. These interest-only regulations were not fully implemented by some banks, even though they came into force in March 2017. The laggards have been rewarded. Those who respected the policy are now at a disadvantage. US Treasury 10-year yield is now at 2.86% after the Fed indication that more rate hikes are coming. Their 2-10 curve is up to just under 18 basis points. Gold is higher again, is now at $1,253 an ounce, another $4 rise today. And US oil prices are marginally higher today, now just under $48 a barrel. The Brent benchmark is now just over $57 a barrel. And the Kiwi dollar is lower after the Fed rate hike, now at 68.3 US cents. On the cross rates, we're now at 95.6 Aussie cents and 60 euro cents. That puts the TWI at 73. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.